Volatility is still present within the cryptocurrency market, and the war is causing a very worrying inflation. The data leaves us with a crystal clear message: difficult times are ahead. In this weekly chart, we can see that from February 28th to March 6th, there was an inverted hammer candlestick between $37,800 and $44,500. If this type of candle appears after weeks of correction, it tends to be a sign of compatibility with the technical analysis. This week, we can see another inverse hammer being drawn, and for the movement to be confirmed, we'd have to see a full body green candlestick which is able to close at least at the $41,000 zone. Let's not forget that we're still trapped in a macro range between $34,000 and $45,500. If we look into the moving averages, we can see that we're found on no one's land between the 50 and 100 periods. What we need to keep an eye on is the potential 20 and 50 period crossing. As we know, in order to confirm the downtrend reversal, we would have to see a downward crossover between the 20 and 50 period moving averages, leaving the 50 period average in yellow above the 20 period average in red. In the daily time frame, we can see that a double bottom pattern was being formed, although it hasn't been confirmed just yet. Something to keep in mind is that for this pattern to be confirmed, it must break the top part of the $45,000 zone. At this moment, however, there could be an accumulation zone being formed. While there could be a symmetrical triangle being formed with this pattern, the price would have the same chances of breaking upwards or downwards. It could even result in an ascending triangle. Although what's clear is that we'd have to be situated within a macro range. If we lost the 0.78 Fibonacci zone and once again reached the previous zone of $33,000, this triangle would transform into a parallel channel. The previous day, on the 28th, we saw a strong upward movement in the price, although 4 days later it carried out a similar downward movement. 3 days ago, we had the same kind of situation. On March 9th, we saw that the chart drew a green candlestick, but the next day it carried out the same movement but downhill. What does this tell us? That we're found in a situation where volatility dominates the market, although within that macro range. If we take a look at the moving averages, we can see that the scenario taking place is that of the one mentioned in some of our previous analyses, which confirm the daily time frame. As we can see at this point, the moving averages already go from largest to smallest, 200, 100, 50, 20. Either way, it's true that the 50 and 20 period have just crossed each other and are still very close to each other. In fact, this is an example of volatility, which is why that downtrend confirmation is a delicate position leading to indecision. As we know, if the price breaks the important support zone of $37,000 located at 0.78 Fibonacci, it could lead towards the $34,000 zone. And let's pay attention to that bearish divergence which is taking place in relation to the RSI. This divergence could have alerted us on March 1st that the price would lose strength, and although it's true, it's not a very evident divergence in a highly volatile context. The averages could move within this zone marked in a pink circle. If we see candles closing above that confidence zone, the price could go towards that resistance zone of 41,000 in the short term. Now let's move on to the SP500 index chart, one of the most important ones needed to understand traditional markets. In this daily chart, we can see that a bullish divergence has taken place from January 25th to March 8th. If the SP starts to dominate that 4,200 point zone, the next target would be 4,400 points, where we'd find the next important resistance. And the market sentiment based on the Fear and Greed Index continues to display signs of extreme fear. While some days the general feeling was just fear, today it's become extreme fear. Despite the market sentiment, let's look at the state of Bitcoin holders. In this chart, we can see that Bitcoin holders continue to withdraw cryptocurrencies from exchanges, which could indicate that they're still storing them in cold wallets, and therefore no intention of being sold. And of course, if Bitcoins are sold, the price could maintain itself and even rise. In a macroeconomic context, in just 5 days, the Federal Reserve will meet in order to reveal their decision around the rise in interest rates and the cessation of monetary stimuli. We must pay attention to this because the rise in interest rates cannot just be of 25 points, but of 50. Another worrying element is that of inflation. In the United States, the Consumer Price Index in the month of February is located at 7.9%, and the price of energy has risen by 25%. Something to note is that used cars and tractors in the United States has risen by 41%. In Europe, however, interest rates are maintained, as announced yesterday by Christine Lagarde, the president of Central European Bank. Some countries, such as Germany, do not completely agree with this measure, as it could maintain inflation levels at a really high rate. Other countries, such as Portugal or Greece, are in favour of low interest rates, as they fear stagflation. And what is stagflation? It's a macroeconomic phenomenon in which there's no economic growth, but there is a rise in prices. In short, it's a combination of stagnation and inflation. This week, in short, uncertainty and volatility have been in the spotlight, and markets brace themselves for tough times.